Hey everybody, Cowboy here. Just a quick look at a successful trade. I took this trade in front of my Algo Factory private group, so they all got to see it before it unfolded. And of course, if their research looked like my research, they could have taken that trade and they would have made some money. But of course, they would have made that decision on their own. Either way, this is pretty cool. I go through the logic of entry, my logic of stop loss, my logic of targets. You get to see the whole thought process, so enjoy it. And if you like this content, stick around afterwards. You get to find out who we are, what we do, how to find us, or simply zap the QR code to the bottom right-hand side of the screen. Go to the website you see right there, www.algofactory.tech. Okay, enjoy the clip. Okay, so I saw an opportunity yesterday, and I actually took two trades. I posted one of them in the private group, and the way it looked was as such. I'm using the replay function, so I've gone back in time. This is the trading view replay function. If you look towards the bottom of the screen, you see these arrows. You can actually enter this function on the top. You see these backwards arrows at the top, okay? Now, if I hit this button, this triangle button with a line in front of it, that is going to show me one candle. If I hit the play button, it shows multiple candles, and it goes, you can control the speed of it. But in this case, we're just going to go one candle at a time. So I saw this opportunity, and I entered right here during this candle, and I had two different stop losses. I had a stop loss right up here above this support, above this resistance, the structure that was created by all these wicks on the left. And then I did take a smaller risk trade with a tighter stop loss, and I risked about half the amount that I risked on this trade up high. However, I made a lot more because the risk to reward ratio is much greater. For example, this was a 1.89 to 1 trade. So essentially the initial trade risking, let's say $1,000, that became about $1,900. If it was, I'm not saying I risked 1,000, I'm just using an even number for you. And then here, this second trade, the way to measure that would be I go ahead and make my stop loss right where that is using this short box. And it's actually a 3.4 to 1. So that means that risking $50 or $500, I should say, to make things kind of congruent in our example here. So it would be $1,700 that I made on that move, right? Because it's a 3.4 to 1. So I multiply the $500 risk times 3.4, and I pull out basically it's 3,400 divided by 2, 1,700. So adding 1,700 plus 1,900 is going to bring up, what is that, 17 and 19? Is that $3,600? I think that I would have pulled out if had I risked 2,000. So that's not bad. You know, that's a total of 1.8 to 1 together, right? So beautiful trade. And here's what it looked like. The algo called it out, right? So price kind of topped out, and then it was making its decision. It was in the middle of a consolidation. And normally I like to wait for price to break out of the consolidation. So I would wait, like the consolidation is basically forming up like this, right? And but I was going to go to sleep, and I didn't feel like waiting overnight, and I had confidence in my algo. So basically price popped below. And I'm only guessing. I can't remember exactly how it went, but normally what would happen is price would pop below the bottom into the area of interest. We could be a little safe and say the area of interest is actually down here below these wicks, but we'll just kind of go along with this less safe, more risky example. And price might pop below here, maybe retrace, and then make its way down. If I think it's going to be a powerful move, I might not look for a retrace. I might just simply enter at the break of the consolidation. And I could have set an entry there with my stop loss, but instead, I actually give myself a little bit more risk to reward by entering a little earlier. I could have set a separate trade and had that, but I just decided to go ahead and enter both the trades. And so as I hit play, we'll see what happens. Price did just mob down. So really, there was a pullback, and it doesn't look like price did pull back pretty far. Had I been looking for a pullback, I could have entered all the way down. Let me bust out an arrow here. Give me 1 second. Where are my arrows, sir? There should be an arrow in this. Yeah, okay. Right about here, you can see there was a pullback with that wick in that candle. So let me see if I can expand this so you can see it there. This orange candle has a wick that moves up. Let me move this to the back here. All right, and we'll move the price to the front. Official order bring. Okay, it's supposed to be in the front already. Okay, well, it is at the front. So you see that wick right there, right here. Okay, so that could have been an entry with a much tighter stop. And if I had gone to a lower time frame, I could have engineered that, but I was asleep, right? I'm trying to get some rest. You know, y'all got to sleep. So anyway, here it is. Pretty much straight to target. A little pullback here, so it did kind of, and my target is based on a fib level, so I did a Fibonacci look. I think this is a 618. Let's see if I remember correctly how I determined my target. Right, like this. And you'll see it's right above that 618. So you'll see that 618 fib right here. It's kind of hard to see maybe if it's this 618 right here. I'll draw a box around it to make it more visible, and then you'll see how there's a line that goes through, and that 618 should match up with there's some volume that was below it on a fixed range. I think I remember doing that. So if you watch it goes on this impulse, you'll see there's a big volume node just below the 618 to which price is attracted. And so that is where I went ahead. I set my target above that, thinking that price might reject it. Actually made it all the way down. I could have set my target a little bit lower in the middle of this volume node, but it was below the 618, and so I tend to err on the side of caution. So anyway, it was a beautiful trade. That was the construction of the trade, the determination of targets, the entry logic. Hope you enjoyed it. Come over and check us out, algofactory.tech. It's on sale right now, $50 a month. And you get to see these trades before they happen. I put this up at the beginning. So anybody that saw this, they could have done their own research. And if the research matched mine, they could have entered a similar trade. And I do this several times a week. So, all right. Have a good one. Hey everybody, Cowboy here. Thank you for joining us today. Don't forget you can go over to www.algofactory.tech. Zap the QR code on the screen. Get us on Twitter at algo_factory777. And don't forget, we help people become traders. We help also to put people on the road to creating an algorithm that you can automate if that's what you would want to do. You can walk away, trade, it's a beautiful thing. And limited time, $49.99 a month for the membership. We hope to see you there. Thanks.